Good morning, traders. Gates W. Adams here. I am your host, and we are back. It's been a few weeks since I've seen you guys, and I have to say, I really missed being in here. But man, what an exciting show we had last week. If you didn't watch it, CEO of Apex Trader Funding, Daryl Martin, was live on the show. And if you haven't seen it, you're definitely going to want to go back and check the replay on that. It was an absolutely phenomenal show. But as we start a new series here, I'm ready to be back, and I'm ready to bring some great guests, which we're going to start off with today with Jered out of Colorado. And we're going to talk to him about his trades, his routine, and what he's looking forward to moving forward. Of course, we have the opportunity, as usual, we will be giving away several evaluations today. So make sure you fill in the form that's going to be in the chat here in just a few moments. And get your chance at that. And one last little great piece of information. New numbers are up. Apex Trader Funding has paid out over $18 million in the last 90 days. That's averaging over $6 million a month. When we're talking about funded traders, we're talking about getting paid. That's the whole point. So make sure you get your chance at that as well. But let's go ahead and start this new series here on the Trader Bacon Show today.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
Jered, what's going on, buddy?
Hey, not much. How are you, Gates?
Man, I am fantastic. I'm so excited to have you on the show. You're my first guest back after a couple weeks off, man. I feel like I've been on vacation, but I've been here watching the whole time. So it's been pretty cool, man. How are things going with you?
Great. Everything's been great. And my experience with Apex has been fantastic. So
that's
really
awesome.
Honored to be here and look forward to chatting with you.
Among the millions upon millions of dollars paid out to traders, love seeing that. So congratulations on that. So let's talk a little bit about, kind of what your routine is. We like to talk to traders and kind of figure out basically all of the components of what makes your trading successful for you. Obviously, it's going to be different for everybody, but Really, we just kind of like to see different approaches to the ultimate prize, which is getting paid as a funded trader. So let's talk about before you get to your charts, whether it's the night before, whether it's the morning of. Now, I know you're in Colorado, you're in mountains, so U.S. Open is 7:30 for you. It's not, not that late sleep in 9:30 Open.
Yeah.
So what is it that you do prior to getting into your trading day?
Yeah, absolutely. I mean, for me, it's obviously an evolving process. But one thing I like to do is I have a rule that I have to show up at least 1 hour before the open. I find that if I kind of show up and stumble in right at, the open, I'm not relaxed. I'm not kind of clear-headed and have an idea what to expect. So I show up 1 to 2 hours before, and that's really where I kind of just see what happened in the overnight and see, what scenarios I can put together or what the open might look like. For me, I primarily trade the first 90 minutes of the day, and I make a point to leave the screens and get away from the computer after that. I might trade the afternoon, but generally I just try to trade the morning. And during that review process, I'm reviewing the futures, reviewing some of the – I trade the NQs primarily, so I'm always looking at Apple and Amazon and seeing what they did and what they might be doing and checking ranges and that sort of thing to start my morning.
So are you looking for something specific in that pre-market or that overnight, or is it really just kind of where it's hitting, what ranges you're finding, support, resistance, that kind of thing?
Yeah, I mean, so in the overnight, I do look like, are we net positive? Are we net negative? Like, what's the overall net? Because you generally see kind of like a rebalance attempt, generally speaking, at the open, right? So if you're 100% net long in the overnight, generally there'll be people taking profits. So I kind of check those levels. And then for me, it's just, more of the bigger dated, weekly, monthly, and daily charts and just kind of estimating, okay, well, this is where I think Apple could go today. This is where I think, a couple other key stocks could go. And then I kind of parlay that into the NQs and ES.
Great. Other than actual prepping the charts, is there any sort of other routine that you have going into the day before you start trading?
Yeah. So, I've been trading since really full time since 2020. But for me, what I've found is I have a checklist that I actually go through each day. Keeps me organized, but also I find that if I take good notes, if I journal well, it keeps me away from looking for that next trade right away. So, when I prepare in the morning, I want to make sure I've looked at everything that I normally look at, whether I want to run any scans or do anything like that. I like to kind of have a document in hand, put pen to paper, and try to stay organized in that regard. Yeah.
Right on. Now, when did you actually get into trading? What brought you into the fold, so to speak?
Yeah, I'm sure like a lot of people, when we were locked down during COVID, for me, it was kind of like the perfect storm because I've always managed my own accounts, whether my retirement accounts or whatever, and I've always been active, but never looked at it like a full-time thing. And when COVID happened, well, the stock market wasn't closed, right? So I kind of jumped in 2020. I mean, you really could have bought anything and been successful. So I had the beginner's luck, and I've been hooked since.
Right.
And it's been great for me. So
now, obviously, we've seen some different types of markets basically happening since 2020. I mean, have you seen some ups and downs? Has it been a pretty steady road for you?
Yeah, to be completely transparent, 2020 was unbelievable, and then 2021 was exceeded my expectations by so much. But I had never been through a down market, so 2022 was actually red for me, and that's kind of what brought me into looking at Apex and other prop firms. Is for me, it was a matter of, hey, I can potentially scale and grow what I'm doing that much quicker by trading someone else's fund and doing a profit share. And so that's kind of where I got to today.
Right. I know for sure traders who've actually seen that huge swing in capital, it's really obvious to see the value because you still have that upside. You just don't have that massive downside. And it just gives it an opportunity to really make it a lot simpler and less stressful in my opinion, but obviously everybody's got to take on that. Well, that's awesome. So you feel like sharing with us some of your strategy and kind of what it is that you're doing and bringing to the table?
Yeah, I think so. What you're looking at, the top row across is the internals for ES, and below is identical set of internals for NQ. So on the far right column, you're going to see price, which is a tick chart. And then working our way kind of where you see the blue and purple, those are the advanced decline lines. And then in the middle there, you see the sectors, and those are from the open.
Okay.
And then, so the advanced decline line for ES, the difference is you see a line in there. That's the difference between weighted and unweighted advanced decline lines. And so
share with us what an advanced decline line is. This is not something that I'm real familiar with, and I'm sure that there's probably some viewers as well that don't exactly understand what that is.
Yeah. So so advanced decline line is just a measurement. For this one, it's the S&P 500. So there'd be 500 stocks, and at any given time, are the stocks going higher, or are we actually having declines in the stocks? So it's just it's a measurement over time of how many stocks in the S&P or NASDAQ that are actually advancing and going higher or going lower. So you can see right now, you can see this forming right here, this purple line. So what you're seeing there is, and you're seeing the white line lower. So that would tell you that the market could be running out of steam here, and we could kind of start to pull back a little bit. And so I think it's a great resource to just get a feel for the overall market and get more than just looking at a price chart. You're getting kind of the internal workings of the ES or NQ, NASDAQ.
So this is going to serve as more of a confirmation, I guess, in terms of what you're looking at and what you're looking for. And if it's in confluence, then or in congruence rather, you have a better idea of what to expect.
I mean, it helps me stay in a trade or get out of a trade, right? So I also, if you look at the next column, is the ticks.
Mhm.
And so a tick is the measurement at any given time of, is the stock ticking up or ticking down? And that's what you're seeing displayed. And directly below them, this is the cumulative tick for the S&P and then for NASDAQ. So you can see here, this is kind of telling me, if you look here, this is the NASDAQ tick. We never got positive. We had one little positive here and one positive there. So for me, the breadth, of the market is somewhat weak. So I would kind of be building a hypothesis that we could start to sell off really later today, just because the stocks are not turning positive. They're getting close, and then we're getting the pullback. So that's an invaluable tool for me. Really, it helps me kind of stay in the trade. If I'm seeing ticks maintain strength, I can stay in the trade. And finally, the last column to your far left is just the volume. And it's a measurement of how much volume is going into stocks that are going up or going down. So you can see here that it's actually below the zero line, meaning the volume's going into stocks that are going down. So there's some selling.
Gotcha.
Yeah.
Now, obviously, we've got 8 charts on here. Is this going to be basically the screen that you're trading off of?
Yeah, that's a great question. So my home office is actually built of 5 monitors.
Okay.
And so this is just on one screen, taking up the whole screen, and it's to my left generally. And it's just kind of something that I keep an eye on. So I'd never trade within this window, but I have it up and I'm always looking at it. It's especially like the sectors, the S&P sectors. You can see the dark green or a light green. That tells me, if we start to see some colors like these light reds transition to like a green, then you can kind of get an indication that the market's kind of coming on the upswing.
Gotcha.
Mm-hmm.
So what is it that you're actually trading off of, and what is it that you're actually looking for in terms of entering a trade?
Yeah, for me, if you look at the far right column, I feel, especially like this year, I really trade off of the CPI prints. So whether I'm looking at an anchored VWAP or I'm running a Fibonacci from the moves that occur during the CPI prints, I have a measurement. And so it's it's more of like building levels. And so if you look in this far right column, the dark blue lines are the CPI print from last week. And so you can see we're actually, if you see where we're at here, we're just below basically where we were last Wednesday before the print hit.
Okay.
And so that, to me, again, because we are all hinging on Jerome Powell these days. And so it's important that I keep kind of a mindset of where were we with the prints and where can we kind of move to. And so I really do trade off of those levels. And I use a number of other charts to create other entry points or exits.
Okay. Now, do you have an example of some of these other charts that you can show us?
Yeah, let me show you. This one I'm kind of proud of. It's more of a new one for me, but what we're looking at here is a Renko chart, and it's 40 points over. Each block is 5 points in the NASDAQ.
Okay.
And the numbers and colors coordinate to it's the delta, whether the bids you're hitting the bid or the ask. And that's a measurement of it. And down here, you've got the volume, the cumulative volume, the delta, and the change in delta. And so for me, this kind of gives me an opportunity to see, is there actually buying that's occurring, or are we kind of starting to top off and start to sell? So I really, really like this chart with Motive Wave.
So now, through all of this, what constitutes an actual entry for you? Where is that, like that key component that actually puts you into a trade?
Yeah, so for me, it is, it's a combination for me. But if I'm looking at this and I can see, for example, this would just be one example that I could use right now, is the yellow outline is the value area where 70% of the volume occurred in that bar, in the set of bars. And so when I see a migration higher, that to me is an entry. And then I would have a stop below this bar.
Okay.
That would be one example. And then again, if I would just jump over to this chart, just looking at these levels, you could kind of see how we flush through, and there we just hang up on this one. So, you know, when we went up, I took a short here, and then my target would be the next line down.
Okay.
Especially I've got two VWAPs on this chart. I have the traditional VWAP that everyone uses, and I also have one that's anchored from midnight that I also use. And that, if everybody knows, you know, institutional level, they, you know, buy and sell off the VWAP. So that's just another piece that I have to kind of maintain more of a bullish or bearish stance.
Okay. Now, are you looking for a specific risk reward ratio? Are you looking for, you know, you say you've got your target. Are you trailing that stop? How are you managing that trade?
That's a great question. So for me, I have a very simple I take 5 points on the upside, and my stop's actually 10 points. So I have to be 75% or better with my trades, you know, hopefully 85%. So, you know, today I had 5 trades. I was right on 4 of them, wrong on 1. So, you know, net positive on the day. But for me, it's more of a scalp. And that's why I like to trade in the morning when there's a lot of volatility and a lot of movement, where I can be in and out in less than a minute.
Gotcha. Something that's not going to happen on, say, you know, the Russell.
Yeah, exactly.
I know a lot of guys like to trade different stuff, but I continue to have this conversation. Guys hate scalping on NQ, and that's what I do every day. Yeah. And the reason for me is because I hate to be in a trade more than like 30 seconds.
Exactly. I feel the same way. And I started trading ES, and it just doesn't move for me. I'm not one that can wait an hour to see the price because of the way, you know, everything's set up. I'd rather be in and out and just have my predetermined profit and my stop loss in place.
Now, there's not a level that you hit where you'll move your stop. It's just either one or the other.
For the most part, yes. I mean, there is times, let's say I get in a trade and the price action just isn't doing what I immediately expect it to do. I will try to reduce my risk and drag my stop up and just kind of accept that I'm probably going to get knocked out of this trade. I do not reverse trades. So if I'm long, I'm not going to be immediately flip out and go short because of the price action, but I will potentially try to reduce my risk on it.
Awesome. Awesome. So what else have you got for us? I mean, what else in terms of your trading structure and strategy do you look at? What's important to you aside from what you've showed us so far?
Yeah, you know, I have one other chart that I could show you guys that I've really, you know, I don't want to share all my secrets per se, but that's no problem.
For sure.
That's why we're here, right? So this last chart we're looking at, again, it's ES on the top and NQs on the bottom. This is a 3-day value, 3-day profile.
Okay.
And so you can kind of see where we're at the value area low. This would be the point of control, and the value area high would be up higher. This is a tick chart on lines, and then these are moving average envelopes. And so for me, like, this would be an example that there, to me, until we would fall below kind of that 15,400 level, I would kind of still maintain bullishness that we would maybe be making a move up to this level of about 15,450 today. I think that would be possible. So I love value areas. I used to trade off of TPOs, and for me, I still kind of have, I'm all about screens. You can't have enough screens, in my opinion. So this one's always up, and it's always something that I keep an eye on and seeing what the value has been. I don't like 1-day value areas. I don't find any use in them, but I've really been happy with 3 days.
Gotcha.
Yeah.
Gotcha, man. That is some awesome information. I just, you know, the more I do these shows, the more information that I'm exposed to. I hope you guys who are watching are continuing to see the value that is provided by these guests that come up here, because really just these different perspectives all kind of come together and really can give you a great insight into what's going on in the markets. Now, as you can see up here, we've got the link for the giveaway. Make sure, if you want a shot at winning one of those free evaluations, fill out the form on there. We will be announcing the winners at the end of the show, so make sure you get that taken care of. So So Jered, where do we go from here? What does the future look like for you as a trader?
Yeah, that's a great question. For me, it's probably about 3 or 4 months ago, kind of got into working with bots, and primarily the bots are rule based, but I also have built some that incorporate machine learning, and I have one that actually has artificial intelligence. And so for me, I don't directly trade with them because it's always a tweaking process, but I have maybe 30 different bots built out. And so for me, I've got an Excel spreadsheet, and I kind of just track, whether they're going long or going short. And for me, it's kind of like a dashboard, and it gives me another reason to stay in the trade if I want to, like if I have some runners or something. But I think that it will continue to evolve. I think the tools are getting better for the retail trader to compete with the institutions when it comes to bots and the automation and the algorithms that are already in place with the big guys. So I see that incorporating more, and I still do my own trading through my own brokerage. And, in the afternoons, if I want to be in front of the computer, those are things I'm looking at, whether it's an option or continuing on the futures contracts. So for me, just continue to dive in. I'm always trying to improve. And so for me, I've got all kinds of, I can show you guys, it's like my checklist and my schedule. And I just really focus on staying organized and staying focused on continuing to be educated. So a great way to not overtrade is to have something else to do instead of just watching the screen all day. So like I said, I work out and I leave the screens. I force myself to walk away and detach. And I think that's extremely healthy for my trading and for my own health. So,
right. And I'm going to take this quick moment here to point out to those of you guys who are listening, if you are trading as a funded trader with Apex, there are some restrictions on complete automation in trading a funded account. So just please make sure you know where you stand on all of that and check with customer service if that is a question that you have, just to make sure that nobody takes that as an opportunity to say, well, hey, I've got this complete automation system that I want to trade in a funded account. So anyway, but yeah, man, thank you for that. So let's talk a little bit about lifestyle, because at this point, your income comes from trading, right? You're a full-time trader?
That's 2020. Yeah. I in a former life, I ran an advertising agency, and I was fortunate enough to have some great success and partnered with a couple of companies, and we actually were able to sell. And so, for me, it was one of those situations where I had some assets, but when I started to look at the scalability, that's where Apex really drew me in, allowing up to 20 accounts, basically up to $6 million. That's astronomical in my opinion. So just continuing to get to that 20 PA account level and continuing to trade. And I love trading NQ because it's the same thing every day. I don't, whether a momentum trader or something like that, where you're having to go and find a different stock every day, I found I didn't like holding a lot of the names in momentum. So for me, this is just a perfect relationship, and I couldn't be more happy.
Right. So how many, if I can ask, how many accounts are you trading at this point?
6.
6. Okay. Now, do you trade them all at the same time with a copier, or do you trade them individually?
Yeah. So I primarily trade them all together, and I actually have like a couple 50Ks, a couple 150Ks, and a couple 300Ks. And so I usually have the trade copier, but also maybe if I'm trading one contract in my 50K account, I might be trading 2 in my 150 account. And it's all based on making sure I have the proper buffer to do so. But yeah, I mean, I would like to get to having 20, 300K accounts, but when you run the numbers, those 50Ks, you get basically the largest drawdown, which is nice when you're starting out and building that buffer.
I know everybody's got their take on it, but I think absolutely for a new trader for first time out, that 50K is kind of that sweet spot.
Right.
Just gives you an opportunity to figure out what's going to work best for you, and then transition into, whatever makes the most sense for you long term. But I agree with you 100% on that. That's absolutely fantastic. So So you're getting some leverage by trading different sized accounts, by trading multiple accounts at the same time.
Mhm.
You're trading for 90 minutes a day. You might jump in for the a few minutes in the afternoon if you see something that's exciting or you have some free time.
Yeah.
For you, what's the ultimate goal of being a trader instead of having a job or a business and something else in your world?
Yeah, I mean, I treat this like a business, and if you don't treat it like a business, I think you're going to run into trouble. So, for me, this is the holy grail. I'd like to probably trade for another 10 years, and I don't see any end in sight. It doesn't take much to be able to click a mouse. So as long as I've got my health and I've got some fingers or something to make a trade, I think I'm going to continue to do it. And just take advantage of the opportunity. I couldn't be more happy with Apex. When I'm getting paid out, it's been several months now, and I haven't even had to do a profit share yet. So it's exciting, and I enjoy it. I really do.
That's fantastic. What advice would you have to the new trader who's coming in and wants to be a funded trader and get paid like Jered?
Yeah, I mean, I obviously take a step back. I would recommend to my friends right away that going the funded route with a company like Apex is so much more advantageous than putting a set amount of money in a brokerage account and trying to do it that way, because your upfront cost is way less, and then your scalability, in my opinion, is way more. And so what I would recommend is, instead of starting in a sim where there's like no skin in the game, that's the great thing of these evaluations is they're not expensive, and you can learn as you go and still feel like you've got skin in the game. So when you transition to a funded account, you're ready to go, and there isn't this drastic feeling of different, because if you're in a sim account and you go into a trade, well, you can ride it out either way, right? But when money's on the line and when you've paid for the account, you're going to want to stick to your rules and try to maintain what's working for you in the evaluation right into the funded piece. So I'd say, sign up for an evaluation and give it a shot, start to learn and start to, increase your knowledge.
Well, and not to mention the rules that come with the evaluation are actually designed to create better traders, because in sim, you can literally leave. I mean, you could start with $100,000 sim account and you can let that thing go to zero before it comes back up.
Right.
And you're not really learning real trading. And
Absolutely.
when you have that drawdown facet, when you have limits to what you can do, you have to make real decisions that would be factorable when you're actually trading in a PA or your own funds, at any point down the line. So, I love the comment there. You got a little skin in the game. It's not so much that it's overwhelming,
right,
and shouldn't be psychologically devastating, like say depositing 10 grand into a trading account, right?
Yeah, absolutely. And just to throw one more caveat on it, I found for me, having, if you can do it with, when you go into a trade, having your automatic profit and stop loss there with you. I find that early on, especially, traders will hold on to losers and take quick profits. And you really want to flip that. You want to be able to take quick losers and hold your profit. And so by setting that stop loss when you enter the trade, it kind of takes the emotion, or, because everyone has that sense that they want to be right. And so for me, wanting to be right is always something that can kind of get you in trouble. And so having that stop in place, and it almost feels like it's automatic and it's out of your hands if you lose the trade, but then you're out. And that's really important. A lot of people will just sit in the trade and try to hold on, when really you should take the loss. And now you've got mental capital to look for the next opportunity.
That's amazing. I love it. On that note, if you don't pick up one of the evaluations that are being given away, make sure to go to apextraderfunding.com, because right now all evaluations are 80% off. So if you want to get a little skin in the game without making it too painful, now is a fantastic time to do that. Make sure to use promo code Benzinga to get that 80% off. And Marcus, Jessica, and Ramon, congratulations. If you guys want to add one to it, take advantage of that as well. But congratulations on those accounts. And you'll be getting an email hopefully by the end of the day with all the information that you need to get taken care of for that as well. Tune back in next week, guys. We have a fantastic show again for you. Really, really looking forward to it. Jered, thank you so much for your time today, man. This has been a pleasure. Incredibly informative, a lot of fun, and I look forward to catching back up with you again. And I'll see the rest of you guys next week here on the Trader Bacon Show.
Thank you.
Welcome to the Trader Bacon Show, where we showcase everyday traders